Hi everyone, Thomas here at Rebel Income. Growth investors like to find stocks that are building upward bullish momentum. And typically, the faster a stock is moving, the better. For contrarians and bargain hunters like me, the story is just a little bit different. In the last 3 days, one of the market's biggest movers has been Gilead Sciences Incorporated. Now, this is a company that I've followed for some time and even used to pretty good effect in a number of my Rebel Income trades. From a 52-week low below $63, the stock has rallied by nearly 13.5% in just the last 3 days. That's a surge in bullish momentum that has a lot of people wondering if the stock is ready to reverse a downward trend that started at the beginning of this year.
Gilead Sciences Inc. is a leading biopharmaceutical company that discovers, develops, and commercializes medicines to address unmet medical needs. The company's portfolio includes treatments for HIV/AIDS, COVID-19 viral hepatitis, oncology, pulmonary arterial hypertension, and serious invasive fungal infections. Gilead's well-known products include Biktarvy, Genvoya, Veklury, generally known as Remdesivir, Epclusa, Harvoni, and Yescarta, among others. The company has multiple collaboration agreements with firms like Merck, Arcus Biosciences, and Janssen Sciences, highlighting its strategic partnerships and collaborative innovation. The stock moved mostly sideways through the last 6 months of 2023 before surging to a peak in January of this year at almost $88 per share. Let's find out if the stock's newest rally from that $63 low makes it an opportunity to buy the stock at a good value price.
Now, before we dive in, I want to invite you to subscribe to my channel. I talk about proven principles of personal finance in my videos with an eye on helping you identify the investing strategies that are going to help you to be a successful investor. If you're tired of guessing what the stock market is going to do and tired of hoping that your investments will somehow, someday work out in the long run, then Rebel Income is for you. Click on the subscribe button along with the bell so you get notified every time I upload new content.
Net income is a good baseline for measuring a company's profitability when compared against revenues. For Gilead, net income was 1.76% of revenues over the last year. Net income decreased in the last quarter to more than negative 62%. The turn to negative net income is a concern because the company is spending more than they're bringing in. Free cash flow represents the cash generated by the company after accounting for capital expenditures. Gilead's free cash flow has decreased by approximately 11.49% over the past year, indicating a slight decline in the cash generated after capital expenditures. Despite this decrease, the company still maintains a strong free cash flow position, essential for funding operations, R&D, and potential acquisitions. Gilead's cash reserves have seen a significant reduction of 29.23% over the past year. Given the severe turn to negative net income, we can conclude the decline reflects increased operational expenses, yet the company holds a substantial cash balance that provides liquidity and financial stability. Gilead's long-term debt has increased slightly by 1.59% over the last year. This marginal rise in debt suggests that the company has been leveraging its financial capacity to potentially support growth initiatives without significantly burdening its balance sheet. Free cash flow and healthy cash suggest that debt service isn't a problem. However, the current pattern of negative net income is a concern. Gilead pays a dividend of $3.08 per share per year. That translates to a very attractive annualized yield of almost 4.5%. That's also high enough to make Gilead's dividend competitive with current bond yields. That makes the stock a tempting opportunity for long-term investors looking for passive income from dividends. There are a lot of ways to measure how much a stock should be worth. I like to work with a combination of price to book and price to cash flow analysis. Together, these metrics provide a long-term target price for Gilead a little under $71 per share, which suggests the stock is fairly valued right now, with a useful discount price at about $57. Here's a look at the stock's latest technical chart. The stock's push off of its 50-week high started last week, with sizable moves in the last 3 days that peaked at about $72 per share on Friday to mark immediate resistance. Current support is around $68 based on pivot high activity seen in the latter part of May. A push above 72 will find next resistance at about $74, where the 200-day moving average sits, while a drop below 68 should see next support at around $65 per share. Gilead Sciences Inc. demonstrates fundamental financial strength with its substantial free cash flow, significant cash reserves, and manageable long-term debt. However, the drop to negative net income is a headwind that could weigh on results in the near term. Despite a very attractive dividend, the stock would have to drop to about $57, which is about 19% below the stock's current price, before it can really be called a good bargain with justifiable long-term upside. That makes the stock a bigger risk right now than it's worth.
If you like this video, go ahead and give it a like. If you want exclusive early access to my videos before they go public, you can sign up for any one of my memberships on my Patreon page. Each membership is packed full of perks that are designed to give you the best opportunity to find useful investing opportunities in any market condition. You'll find the link in the description area of this video. Thanks for your time, everybody. Talk to you again soon.